Hello, what's up, everybody? This is Sumko, the Korean bro. Today is 2023, June 22nd, right? Okay, let's see. Hmm. Intel shifts gears, foundry services take the spotlight. Uh, the feds are going after Amazon. Is Amazon Prime's dominance in jeopardy? Is SNDL a top growth stock? Wall Street's turning on Disney at the wrong time. Adobe reports growth from new AI services, but is this stock really a buy now? Mm, Okay, first, Adobe reports growth from new AI services, but is this stock really a buy now? Adobe stock is on a roll, aided by the hype around artificial intelligence. Adobe isn't the only software company putting lots of new AI tech to use. There could be better buys out there right now. Okay, Adobe offers a solid financial update. Uh, But how worthy is the hype? For all of the wild predictions about generative AI growth and how it will transform the world, one might expect Adobe and its new suite of AI powered tools to equate to a rapid ramp up in revenue growth. After all, Nvidia reported expectations its data center chip revenue will nearly double from the most recent quarter to the next because of AI. But Adobe is an NVIDIA customer and needs to purchase lots of AI enabling hardware and develop new services to keep pace with all of its software peers. They're doing the same. NVIDIA's explosive growth will not be the same for Adobe. For now, software customers still behaved cautiously this year as they manage a slowing economy and perhaps even a 2023 recession. This translated to lower growth for Adobe during its second quarter, fiscal 2023, and for the remainder of the fiscal year. At least lower, slower growth than in times past. Is Adobe the best AI software stock right now? After the recent surge, Adobe is now valued at 47 times trailing 12-month EPS. The valuation drops to 28 times EPS based on Wall Street analyst EPS expectations for next year. Hmm. Skip. Okay. Plug Power. Ginkgo Bioworks. Datadog. Let's see Datadog. Okay. Datadog. Okay. Datadog. These growth stocks are set to rebound when the economy regains its momentum. Artificial intelligence could add $13 trillion to the global economy output by 2030. Datadog is a leader in several observability software verticals, but the company has hardly scratched the surface of its addressable market. Cognex is the market leader in industrial machine vision systems, and the company believes it will continue to take share in the future. Recession fears sent the S&P 500 tumbling into a bear market last year, and the benchmark index is still down 8%, but patient investors have not to fear from a recession. History says the economy will regain its momentum in time and the S&P 500 will find its way back to bull market territory, buoyed by secular trends like artificial intelligence. Indeed, consultants McKinsey estimate the AI could boost global economic output by $13 trillion by 2030, and Art Invest estimate that AI software sales will increase at 42% annually during that time period. Many companies will benefit as AI becomes more prevalent, but investors should take a closer look at Datadog and Cognos right now. Shares of Datadog and Cognos are currently down 51% and 41% since 2020, respectively, but both businesses are bursting with potential. Anyway, Datadog. Digital transformation helps enterprises stay relevant and better serve their customers, but it also makes IT environments more complex. Hmm. Enterprises depend on an ever growing number of software systems, and they're often spread across private data centers and public clouds. Keeping those systems performant and secure is critical. Ever growing number of software systems, and they are often spread across private data centers and public clouds. Datadog provides observability and security software that gives clients real time visibility across their IT infrastructure. Helping them identify and resolve performance security issues. Its platform integrates more than a dozen different software products, and it features more than 600 turnkey integrations that simplify deployment. Its software also leans on artificial intelligence to automate anomaly detection. Hmm, wait, hold on. Uh, Helping them identify and resolve performance and security issues. Its platform integrates more than a dozen different software products. And it features more than 600 turnkey integrations that simplify deployment. Its platform integrates. I deployment. Its software also leans on artificial intelligence to automate anomaly detection, root cause analysis, and incident alerts, which ultimately helps development, operations, and security teams work more efficiently. Datadog reported reasonable financial results in the first quarter, especially in the context of difficult economic environment. Its customer count climbed 29%, and the average customer increased spend by more than 30%, evidencing the value created by its platform. In turn, revenue climbed 33% to $482 million, and non-GAAP earnings rose 17% to $0.28 per diluted share. Looking ahead, Datadog is well positioned to maintain or even accelerate its growth trajectory as economic conditions improve. Industry experts have recognized its leadership in several observability software verticals. For instance, consultancy Gartner says Datadog is a leader in application performance monitoring. Forest Research says the company is a leader in AI for IT operations, and G2 says Datadog is a leader in cloud infrastructure and server monitoring. The company has also displayed a remarkable capacity for innovation throughout its history, adding new products to its portfolio on a regular basis. The quality, coupled with the growing need for observability and security software, is driving its total addressable market higher. Datadog believes its TAM will reach $62 billion by 2026, up from $41 billion in 2021. Currently, shares trade at 16.9 times sales, a bargain compared to the 3 year average of 37.7 times sales. The multiple is far from a cheap, but high quality businesses like Datadog often command premium valuations. So investors should take advantage of the discounted price. Now is a good time to buy a small position in this growth stock. Rivian faced tough supply chain challenges throughout 2022. However, Amazon remains confident in its growth potential. The stock looks grossly undervalued related to those of its EV peers. Rivian was overvalued. Well, Rivian product produces three types of vehicles: the R1T pickup truck, the R1S SUV, and the Amazon EDV. In 2021, it produced 1,015 vehicles, delivered 901 of them, and said it had sufficient parts and materials to produce 25,000 vehicles in 2022. Yet Rivian only produced 24,337 vehicles and delivered 20,000 of them in 2022. It generated $1.66 billion in revenue, but it racked up a net loss of $6.75 billion. It also pushed back the fast deliveries of its R1S SUV from mid 2021 to late 2022. Rivian attributed most of this slowdown to supply chain constraints. At the end of 2022, it predicted it could more than double its annual production to 50,000 vehicles in 2023, but that forecast broadly missed analyst expectation for 62,000 vehicles. It only produced 9,395 vehicles and delivered 7,946 of them in the first 4 quarter of 2023. So it needs to significantly ramp up its production over the next 3 quarters to hit a target of 50,000 vehicles. For the full year, analysts expect Rivian to more than double its revenue to $4.3 billion, as it narrows its net loss to $5.63 billion. Okay, Peter Lynch. The legendary investor really shared words of wisdom that shouldn't be ignored. Buy companies you know. Probably the most famous investor advice from Lynch is to buy companies you know. He certainly practiced what he preached. For example, Lynch liked Dunkin' Donuts coffee. He looked into the company's business in more detail, led to him buying shares. The stock went on to become one of his biggest winners. Read investor presentations. Okay, an important corollary for Lynch to buying companies you know, however, is knowing the companies you buy. He told Hannah, you need to understand the company story. Lynch thinks that one of the best ways to understand companies better is to read investor presentations. He noted that earlier in his career, he and his team would have to wait for companies to mail their quarterly reports. Today, though, retail investors have instant access to much of the same information professional investors do. He said in the Yahoo Finance interview, the information for the public has increased dramatically. If they want to do the work today, it's simple. There's way more information available. Lynch believes that anyone who is considering buying stocks should be able to summarize the investment thesis for doing so. But an investment thesis doesn't have to be complicated or long. He said you ought to be able to write at least 3 or 4 bullets, not full sentences even. Writing these bullet points down can help investors fully think through exactly what they should buy a given stock. Writing these bullet points down can help investors fully think through exactly why they should buy a given stock. The process can also help in determining when to sell a stock. Then show you how on. The main thing is to keep an eye on the fundamentals of what happens to the company's business. Don't be concerned if your investment this doesn't pan out. Then show you, I was probably right 6 times out of 10, maybe 6.5. But if his thesis remain intact, he'd buy even more shares when stocks fell. Doing so helped him become the legendary investor he is today. Zoom. One magnificent growth style. Okay, Zoom Video Communication is a large holding for Art Invest, the investment firm run by Kathy Wood. Art Invest thinks Zoom Video stock could reach $1,500 per share in 2026, implying 180% annual growth rate over the next 3 years. Zoom's revenue stream could see major contributions from AI-empowered productivity tools. Okay, Zoom Video. Okay. It's the third largest holding in the Art Invest ETF's portfolio at the moment. It's a huge holding because Art Invest believes it could reach. But before you open your stock brokerage app to go all in on Zoom video, there's are a few things you should know. From individual to enterprises, by the end of this year, 39% of global knowledge workers will work in hybrid scenarios. 39% of global workers, other 9% will be fully remote. Orange Garden. In 2026, Art Invest projects 75% of global knowledge workers will be in a hybrid or remote working situation. Converting free individual Zoom users into paying subscribers is an uphill battle. Uh, but enterprise customers are expected to pick up a slack. By 2026, Art Invest expects half of Zoom's total user base to become paying subscribers. Revenue rose just 3% year over year during the company's fiscal first quarter, which ended April 30, but the figure doesn't paint a complete picture. Zoom's fiscal first quarter was a relatively difficult month for enterprise software service providers in general, as fear of a recession caused many businesses to tighten their belts. Wood is likely encouraged by Zoom's videos' continued uptake among its largest customers. Enterprise revenue during the first fiscal first quarter jumped 30% year over year. Moreover, the number of customers contributing more than $100,000 annually was up 23% year over year at the end of April. Artinvest isn't expecting individual users to start paying for subscription again as they did during COVID-19 pandemic related lockdowns. Instead, Wood is projecting that the majority of enterprise customers and 90% of its overall user base will be paying subscribers. So, should you buy now? During Zoom's fiscal 2024, which ends next April, management expects around $61.64 billion in adjusted earnings at the midpoint of its guided range. Right now, you can buy the stock for at 42.7 times the company's own forward-looking earnings expectations. Zoom's forward-looking price-earnings ratio is modest. If Art Invest predictions come true, that said, a lot can go wrong. For example, Art's 1,500 estimate implies large revenue contributions from AI-enabled products, but we don't know how popular they'll be yet. This spring, Zoom unveiled a new set of still experimental features that leverage generative AI to support chat, email, and meeting summaries. It's also building a new feature that can summarize long chat threads and help target meeting participants to catch up. Zoom's AI related intentions are commendable, but expecting them to contribute meaningfully to total revenue might not be realistic. Art should a bear case for Zoom's video stock that assumes zero contribution to average revenue per user from the company's AI power tools. Hmm. Since it's past 12 at midnight, so see you and have a great night. Okay, bye bye everybody. Bye bye.